So we have two massive newsworthy items for SoFi stock that we have to discuss today. And this news was big enough that I had to break the schedule and bring this news to you. So don't worry guys, I'll push that video out this Sunday there. It's gonna be the top stocks that I would personally wanna buy and hold forever. But we gotta get to this news today, so settle in because you're going to get a big dose of truth that you're probably not gonna hear anywhere else. Just make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today. So we got two pieces of news here today that are going to generate a lot of headlines, a lot of content probably, especially in the kind of the SoFi community there. So it's definitely something worth understanding on a much deeper level, guys. Both bull and bear, we've got to get down to the actual what this means to the stock. So first up, Hindenburg Research shutting down. Now, obviously for a stock like SoFi, it is shorted significantly. It has a very, very high short percentage. And of course, Hindenburg Research is one of the notorious research firms out there that create a lot of short seller reports around a lot of different stocks that we love. And of course, that means at some point in time, SoFi is going to hit their crosshairs again, but they're actually shutting down. And even more interestingly, they might actually be revealing all their tactics, all their tricks and tips and whatever the heck else they do, kind of behind everything that they do. So appreciate our group members there that actually posted this out there and have been kind of following up with all the different articles and such, kind of discussing this further, as it's really kind of intriguing. You know, obviously we kind of know a lot of what the hedge funds do and a lot of what these short seller reports do and a lot kind of how they operate and such, but it'll be kind of interesting if they're going to try to turn that into another business model of essentially exposing the industry, whatever the case is. We'll wait and see for that. But what does this mean for SoFi stock? Because I already heard and kind of saw some people running with this crazy narrative that this means great things for SoFi. The reality is it doesn't mean a whole lot, if anything, in regards to SoFi. Sure, it's nice to have the firm gone, and but there are other firms out there that do the same exact thing. And more importantly, doesn't really affect the short interest in SoFi. It's not like all of a sudden Hindenburg Research goes away and all of a sudden all these institutions, all these hedge funds and everybody else that has short positions on SoFi go, oh, well, we better go and close these out. Just move on. You know, hey, Hindenburg Research in here. No need to short stock anymore. It's not true at all. It's not, you know, if Wall Street's going to short a stock, they're going to short a stock. They don't care about Hindenburg Research in the end. And even the big banks and big hedge funds and everybody else, they all will continue to short until the history of time, despite the fact that we all know short selling is kind of a losing game. I really don't understand the reason whenever the game's rigged to go up, why you would short sell. But hey, there's a market for it. There's a reason for it. More importantly, people want to pay for it, right? So they're going to continue to do it over and over and over again. I'm sorry, this one research firm going away, there's going to be another one that fills the void there, or the other competitors are just going to get bigger. So it doesn't really mean anything to the stock. It's not like you're going to see short interest where it is right now, and all of a sudden that short interest is going to get cut in half in regards to SoFi. Then if that does happen because of this, okay, I guess at that stage, it very well would have a massive impact, but I don't think there's anybody out there that actually believes that all of a sudden short interest is going to get cut in half because Hindenburg Research is going away. It's just not how it works, guys. I'm sorry. I know there's some information. It's small. It hadn't been a lot, but there's some out there thinking that this is the greatest thing since sliced bread and SoFi's going to the moon because of it and all that other stuff like that. You got to ignore that sort of stuff. So absolutely nice to see. Absolutely will be very interesting if they decide to turn this into another business where they kind of expose the business just for curiosity's sake. I mean, obviously we know a lot of the games that they play, but some of the other inner workings and stuff being out there would be really, really interesting to read and would probably help us understand what other firms are doing out there that provide this sort of research. So that way we can kind of break down the difference between whenever it's just BS and whenever they actually find something that's actually tangible you can go off of. Maybe it'll give us some insight in that. But beyond that, that's the only impact in regards to SoFi there. So make sure you kind of keep that in mind. But this next piece to me has more of an impact on SoFi than the last piece we talked about. So let's talk about that next. And that would be big potential price targets coming for SoFi. Now, this was actually sent to me by a group member as well, and I was actually able to track down the video pretty easily and find out all the details in regards to it. Obviously, there was some new coverage initiated on SoFi. Obviously, I believe they put an outperform rating out there on SoFi, but they did not provide a price target. But shout out to Tanner over at Future Investing there. He does some great work over there in regards to SoFi and other fintech. He actually got a hold of the internal documents there. Now, I understand that's kind of the way these things work. They can initiate coverage. They have kind of a public facing thing. And then of course they kind of want you to pay for their service or, be a client or whatever the case is in order to get these inside documents, kind of before they release the documents. But he got a hold of the documents ahead of time somehow. Hey, like I said, shout out to him. I didn't find it, guys. Don't want credit for it. So I'll put the screenshot up for you guys right here. And let's kind of go through it real quick. Stock thoughts and valuation. We are bullish on SOFI shares, which currently trades at 11.9 times estimated 2026 EBITDA, a greater than 25% premium to a subset of comparables in Exhibit 55, which, as pointed out, we don't know what Exhibit 55 looks like, and an approximate 22% discount to a wider group of fintech stocks in our universe. Again, we don't know what the heck their universe is. Our base case is that SOFI will drive meaningful multiple expansion, perhaps driving its current roughly 23 times estimated trailing EBITDA forward multiple on 2026 projections at 23 times estimated 2026 EBITDA. SOFI would trade at $26, offering nearly 90% upside, and in a more bullish view, we cite a 10-year free cash flow return on invested capital analysis discussed below, which again we don't have, which implies a $35 12-month stock price. Okay, so a lot of fancy words in there. Basically, they're saying, according to the valuation that they see and according to the models that they've run, basically we can expect a $26 in kind of a base case, all the way up to a $35 in a bull case type scenario. And that's based on a 12-month time frame there, and of course based upon what they see and kind of they're pulling their numbers from, extrapolating out from a lot of other fintech that's out there, trying to create the right multiple for SOFI stock there. And we've talked about that before in regards to this multiple for SOFI. We don't really know what that multiple is going to be yet, so obviously this is their best guess at getting us there. So the question is, what does this mean for SOFI stock? Okay, here comes the truth without the hype, guys. This is exactly why you guys are here. It means nothing to SOFI stock. I apologize. Just like whenever the bears are out there, whenever price targets are really, really low, and SOFI is riding around at $7, $8, and they're saying, oh, my price target for SOFI is $4, and all that other sort of stuff like that. The same exact thing applies to the upside as well. They do the same exact game. They play the same exact game. They ride the momentum. They create this narrative and this story, and they have their little pretty models and charts and graphs and all that sort of stuff to show you why it should trade at some crazy high price as well. Now, I'm not saying they got out of control and they got crazy with their price targets of kind of a base case and a bull case. They're actually being very, very reasonable in regards to that. But in regards to what does it mean to the stock, it means absolutely nothing. I ignore price targets from analysts. I ignore upgrades, downgrades, overperform, underperform, overweight, underweight, whatever the heck they like to throw out there. I ignore all of them. And let me kind of give you guys some examples as to why I ignore them. I would say one of the bigger Tesla bull analysts out there is Dan Ives, right? I mean, he's all over the place all the time talking about Tesla, a lot of tech companies actually. But he's definitely, I think we all can agree, is a Tesla bull, right? Now, back in 2022, beginning of 2022, when Tesla was kind of coming off that peak there and we didn't know whether or not it was going to crater down and go back to the moon, his price target was $480 or $470 for Tesla stock at that stage, based upon, FSD's coming and we got expansion here and energy's kicking up and all these other sort of things like that. Then 1 year later, guys, just over 1 year later, his price target magically, with all those things going on, nothing changed in regards to his narrative, was $175. So somehow Tesla was taking a 65% haircut from where he thought it was going to go the year prior based upon nothing changing. Actually, the fundamentals of the business actually got better during that time. Tesla's earnings got better. Everything got better except for the stock price. But of course, whenever the fundamentals were worse, he was riding high, 470, 480, whatever was his new price target. And then of course, fundamentals are better, stock price is in the toilet, and all of a sudden his stock price is 65% lower, which tells you it had nothing to do with any of that sort of stuff. It had nothing to do with valuation, right? Because you're not saying when Tesla's at 1,000 PE that somehow actually, that's a pretty cheap price. I see 485 coming. I see 25% upside from here based upon, I don't know what. I mean, based upon a crazy valuation just getting crazier. I don't know. That's the reason why I don't like that. Same exact thing whenever it's down at 175, he didn't give a single, hey, this is really cheap for Tesla. I can't believe we're getting Tesla at this cheap of a multiple. It was kind of the same narratives over and over and over and over again. That's why I ignore all this sort of stuff, because unfortunately, even though he's a bull in the stock, he had you buying at 400 thinking you were getting a screaming deal. To me, that's not prudent to you as an investor. That's not giving you an accurate bit of information of where Tesla is going in the future and what a good price for Tesla is, and you as an investor making the most amount of money. Now, of course, whenever it was down lower and he was saying, hey, my price target's higher, okay, that right there made a little bit more sense. but it shows you the game is exactly the same and it has nothing to do with when Tesla is a good buy or a bad buy or anything else like that. That's why analysts are utterly useless, because they are chasing momentum, guys. They are also chasing clients, and then they are also chasing clout, right? They want to be on more shows, get themselves out there more, because guess what? That brings them more clients, which brings them more money in the end, not anything else. And more importantly, when you look up analysts and go do your research on analysts, but I'll give you the short version right here, they do what their bosses tell them to do. They put out price targets based upon the trades that the funds have on. That is what they do. So it might tell you kind of where the momentum is, but they don't really even tell you that. It just tells you what that firm probably, what trades they probably have on. That's all that it tells you, which is useless to you as a buy and hold investor. So I don't get excited about price targets going up outside of the fact it may mean, okay, maybe some traders are jumping on board with this. Maybe there's some trades out there among some hedge funds. But in the end, it all comes down to valuation. Your portfolio is a disaster by following analysts, following price targets, and everything else of that nature. Sure, they're going to be right sometimes. Of course, everybody who makes predictions all the time are all eventually right at some point in time. But your job is to be a prudent investor. That's why I put absolutely no stock in something like this. Ignore the noise, ignore somebody initiating coverage, putting on an outperform, and then having a high price target for SOFI. Sure, nice to see. Beyond that, means zero to my investing. I absolutely am not basing a decision on that. I'm basing it on what is important. So let's talk about what is actually important for SOFI stock. And guys, this answer is very simple. The only thing that I care about, especially right now today, in regards to SOFI stock, is the earnings call coming up, which we'll cover here. I'll put out a video about that next week, I believe, in regards to what I think is going to happen on SOFI's earnings. And then even more important than that is not just what they just did, but what is their guidance for next year? And sometimes they guide out a couple of years there. What are they going to put out there for that guidance? That right there is what matters in regards to what's going on with SOFI stock. How is the stock performing? How are the fundamentals looking? What does the company see happening over the course of the next year? What growth opportunities are they going after? All those things like that matter 1 gajillion times more than some analyst who initiated a price target on SOFI. Even if it's positive towards SOFI, I don't care. I don't need positivity. I need actual fundamentals, because that's what moves the stock over time. Sorry, Dan Ives was really excited about Tesla approaching $500 way back in 2022, and you see exactly where that got you. Optimism doesn't get you where you need to go. Of course, the stock went all the way down to about $100 or so. I don't need any of that garbage. I need fundamentals, and that's exactly what we're going to get on that earnings call. So make sure you stay focused on those type items, those 10Ks, everything else that the company puts out there. That's what I care about. Analysts are going to do their thing. Cool. They're trading. Different game, different world, different everything. Means nothing to me as an investor. And if you want to learn exactly what to look for in the earnings calls, go through earnings calls live with me. Take free courses, get your free coaching on how to invest, how to create a valuation, how to set price targets, how to do due diligence on a stock, and be a part of the best 6, 7, and 8-figure Discord out there. Jump on our live Q&As, talk to me anytime you want, and so much more. I may have left something special down in the pinned comment for you guys that stuck around the video this long, so check it out, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.